Alright, so I might delete this video, this trading strategy video after 48 hours because this strategy is specifically for my premium members, but I don't want to leave you guys behind, okay? So I might delete it after 48 hours or even after 24 hours, but make sure you download this video, make sure you save this video so you don't miss out on this strategy I'm about to teach you, okay? So what I'm going to be teaching you is TBW trading strategy, which means time-based volume. Now, this strategy is a three-step trading strategy, so it requires 3 steps, right? And most importantly, it is a mechanical and stupid simple strategy. So you don't need daily buys. It can work on any time frame, but I would suggest that you use it on 5-minute or above 5-minute time frame to see the best results. Now, when I'm going to show you the strategy and examples, you are going to be shocked on how well it works. And of course, when you go and backtest, you will see the results by yourself. But again, make sure you download this video before 48 hours because this video might be deleted, okay? So what we are doing first is we are identifying a fair value gap. That is step number 1, okay? So we need to have a fair value gap. Now, the next step is that we need to see a low. In this case, we have a bullish fair value gap, right? So we need to identify a low around the fair value gap, or it could be inside the fair value gap, just like this, okay? So we have a low around this area. Cool? So we have a low around the fair value gap or inside the fair value gap. Now that is step 2, right? Identifying a low. Now, of course, you would identify a high if that was a bearish fair value gap. So the step number 3, really, really simple and really mechanical, is that the very first candle, which is right here, that sweeps that low, right, must close as a bullish candle, meaning that it should close above the opening price of that candle. So we have this 5-minute candle, it sweeps the low, and then it closes bullish. Now, why do I call this time-based volume or TBW? It is because within this 5-minute candle, we had so much action that indicates that big players were involved around this area, okay? So we have a low. This candle specifically, the very first candle, sweeps that low and closes bullish. Now here around this area, the sellers are being absorbed. So they tried to push the price down, but they couldn't, okay? And then we have a liquidity sweep, and then buyers came in strongly and giving you a sign that the market could be pushing towards the upside, okay? Now, when we sweep the low, and we are, of course, inside a fair value gap, so one more key thing, that the sweeping candle, the candle that sweeps the low, must be inside the fair value gap, or it must tap into the fair value gap, okay? It has to touch the fair value gap. Now, the low could be above the fair value gap. It doesn't matter. But the sweeping candle must come into the fair value gap, or if it's already there. So, for example, in this example, we already have a low inside the fair value gap, right? And then this setup can happen here as well. Now, if the sweeping candle goes below the first candle of the fair value gap, so a fair value gap consists of 3 candles, right? 1, 2, 3. So if it goes below the low of the first candle, then that setup would be invalidated. So again, sweep of low, we are inside the fair value gap. The very first candle that sweeps the low closes as a bullish candle. Now from here onwards, what you want to do is if you want to take an aggressive entry, you would enter right away. You would put your stop below the low of this candle, and you can go for 1 to 2 risk reward, or what I like to do sometimes is use standard deviation. So I use my fib from the low of this candle to the high. And what I do is I target the -2 level. Okay. Now that is aggressive way of entering the market. How do you take precise entries? And that is basically using the fib again from the low to the high, and then going into the settings here, right? And turning on the 0.5 level. And then waiting for price to tap into this And that's where you can take your long entry. Okay, and you can put your stop below the low. And in that case, that would give you 1 to 5 risk to reward ratio. Okay, and I took one trade using this strategy today. I'm going to show you right here if you can see it. Okay, and also the members took a lot of trades today as well. But this strategy has a 70-75% win rate. It is so simple, but don't take my word for it. You have to go and backtest. Go to FXREPLAY. There's a link down in the description. I'm not going to say that you have to use that platform, but you can use my code and get 10% off or something like that. That's the best backtesting platform. Well, you can go and backtest this and see the results by yourself. Okay, so again, simply low sweep. The first candle sweeps the low, closes as a bullish candle. We are inside the fair value gap. Now, similarly, let's say that we had a high over here. Let's just turn this candle to a red candle. Okay, let's also turn this to green candle and green candle. So we have a high and we have a bearish fair value gap. Now what happens is we are inside the fair value gap. Price sweeps the high on the 5 minute. So we are not looking at other time frames. We are either staying on the 5 minute, the 15 minute, or 1 hour or 4 hour. Okay, so we sweep the high, and then what happens? We close as a bearish candle, meaning we close below the opening price of this candle. Again, indicating in this case that the buyers got absorbed. So the buyers tried to push the price up, but then huge sell limit order was around this area that absorbed all the buyers, and then the candle closed as a bearish candle. Again, you would take your short entry, you would put your stop. Okay, that is inverted, so I'm going to do this. You would take your short entry, right, and then you can go for 1 to 2 or target the standard deviation projection -2. Again, you can use the precise entry zone, so you can take your entry from the 0.5 level, or sometimes what I like to do is take my entry at the retest of the opening price of that candle. So if price goes here, that could be my entry zone. Okay, so one key thing, confluences that I'll teach you is that if we have swept, let's say, let me just revert this. So let me just remove this, right? If we have swept Asia, let's say this is Asia high, right? We go up and we sweep the Asia high, right? And let's say that this is Asia low, right? Now, you can have like your clear draw on liquidity, right? So if you trade and you know where the draw on liquidity is, where the market is heading towards, that is gonna like increase the win rate. But you don't need this. You can just trade it as a mechanical strategy. Just trade the setups whenever they are presented. But it definitely helps, because at the end of the day, the markets can sometimes like go sideways and stuff. So it's best to know where the market is going towards. And especially if we take out time-based liquidities, which are session highs, previous day high, previous day low. Then again, if we take out Asia high, the next draw obvious could be Asia low. Similarly, if we take out the London high, the next draw could be London low. Or if you take out the previous day high, then the next draw could be the London lows, Asia's lows, or the previous day low. So with that out of the way, let me give you guys a lot of examples, and that is going to clarify each and everything. And again, make sure you save this video because this will be deleted in the future. All right, guys, so here is example number 1, and this happened today on NQ. So again, you can trade every single pair, every asset, even crypto, any random market, it doesn't matter. As long as you follow the strategy, you will see good results. So looking at this market, right, you can see that we have a clear low down there. Okay, it is a clear low, and also we have a fair value gap confluence, right? So let me just make this a bit soft. So look what happened here, right? The very first candle that swept the low closed as a bullish candle. But on top of that, the sweeping candle was also inside the fair value gap. Okay, now that indicates that the sellers got absorbed and the buyers kicked in. Big players were involved within this 5-minute time window, meaning time-based volume. So then you could have taken an aggressive entry. You could have put your stop below the low, and you could have targeted 1 to 2, or let's say that you want to target the standard deviation So you would have targeted the -2, giving you 2.5 risk to reward ratio for this trade. But notice what happens next. We come back, we retrace back, right? And we have Asia high. We sweep this low again, and then we are again inside the fair value gap. So the sweeping candle taps into the fair value gap again and also sweeps the low. But notice when we sweep the low, the sellers got absorbed, huge volume came in, and the candle closed as a bullish candle, meaning that it closed above the opening price. Then you could again take an aggressive entry, could have put your stop below the low, and probably could have taken one partial at the Asia high, but then it just kept going up. So super mechanical, super easy, and repeatable trading strategy. Let's move on to the next example. All right, so here is another example, and I want to show you this example because I want to tell you that this works on every single market. It doesn't matter if it's Forex, crypto, futures, stocks, it doesn't matter. So looking at CAD JPY, the most random pair ever, right? And you can see that we have this fair value gap, right? And this is the first candle of that fair value gap. So as long as price doesn't go below that, the fair value gap is still intact and it can be utilized, right? So notice how we had this low here. Price swept that low, but it didn't close bullish. So we wouldn't take an entry here. But then price engineered another low over here. And notice what happened with this candle. The very first candle that swept that low, it closed bullish. So again, what happened here? The sellers, they tried to push the price down, but then they were absorbed because there was a big buy limit order, a big institution, a big bank or whatever, right? It had its order here, and then that aggressively pushed the price up. Now that is TBW sweep, and that's what I call it, TBW. So you can literally just mark it out like this, TBW, right? And then what you could have done is either you could have taken a aggressive entry, or you could have waited for a 50% tap and look at the precision over here, and also look at the standard deviation projection that is projecting, right? So this could have been your entry if you want to be precise. Again, you're going to miss out on setups if you use the 50%, but it's really up to you. And this would have given you 1 to 5 risk to reward ratio with ease. However, if you took your entry here, right, that would have given you 1 to 2 risk to reward. Okay, really simple, really mechanical, guys. There's nothing complicated about it. It is simple. It uses logic, right? We are using logic about what's happening with the candle. We're taking that information and implementing that into our charts to take good trades. And these trades are huge risk to reward ratio trades. Let's move on to the next example. All right, guys, so here is another example, and that happened today as well on Euro USD, right? So if you look closely here, we have a high over here. And to the left side, you can also see is that we have a fair value gap. Now, it doesn't matter if the fair value gap was mitigated in the past. As long as it's a fair value gap, it's a key level, and that's what we have to look for. We cannot look at order blocks or any other PD array. We're just relying on the fair value gap and not looking at anything else. So notice what happened here, right? We swept that high, and the very first candle, that swept that high, closed as a bearish candle. And on top of that, it also tapped into the fair value gap. So that is your 3 steps, right? Again, buyers tried to push the price up, right? But there was a big sell limit order. So there were aggressive buyers, right? Market buy. So if I click on buy here, that's aggressive buy. But if I set like a limit order here, that is a limit order. So there was a big limit order around this area that pushed the price down so hard within 5 minutes. So time-based volume, right? That it closed bearish. Again, you could have taken your aggressive entry here. You could have put your stop above the high. And then again, you could have either used the standard deviation projections for this, which would have given you 1 to 2 risk to reward. Or we had clean equal London lows, right? So we swept the London high. So the next target could have definitely be like the London lows because these are very clean consolidation zone. Again, this could have been your entry. The stop would go right above the high. Then you could have targeted these equal lows. Let me give you guys one more example. All right, guys, so here's the last example. And I'm looking at crypto right now. So I'm looking at Solana. And again, same repeatable process. We first of all identify a fair value gap, So this is a fair value gap, right? And again, this is the first candle of the fair value gap. So as long as price stays above it, we can look for a setup, right? So notice what happened, right? We had a low here. Price swept that low, but it closed bearish. We're not going to take our entry yet. We need a specific type of behavior. So we have another low here, right? So we engineer another low. And what happens next? Price, the very first candle that sweeps that low, closes as a strong bullish candle. Now, what is this indicating? Well, absorption of sellers, big buy limit order here, absorbing all the market sellers. And again, you could have chosen a 50% entry zone or entered below the opening price or aggressively here. It doesn't matter. The 1 to 2 is guaranteed. So let's say you took your entry here. You had your stop right above the high, right above below the low. And you could have targeted the standard deviation, and that would give you 1 to 5 risk to reward ratio with ease. So yeah, make sure you guys save this video and make sure you go at backtest and see how this works out for you. Again, this video might be deleted. Maybe I'll change my mind, but make sure you save it, and I'll see you guys in the next one.